Most people get excited the better things go. They feel better about stocks the higher the prices. They tend to buy more when the prices are at high levels. And then when it turns down, they get depressed and they get sad and they rue the day they ever bought a stock, and they tend to sell at low prices. In addition, you must invest differently from the herd. You must invest idiosyncratically. Idiosyncratic positions are uncomfortable. Ever identified an asset that was overpriced and got out only to see it go down the next day? Overpriced assets become more overpriced, and you have to be able to live with that, and it's uncomfortable.
You prompted me to think a little bit about your notion of being aggressive or defensive in different kinds of market situations. You talk about that as something that governs a lot of how. Could you explain a little bit?
Well, I really think that the most important single decision for what I call the medium term in investing is whether it to be more aggressive or more defensive at a point in time. Now, I'm not talking about the short term, like the next day, week, or month. And I'm not talking about the long term, like 30 years, when you can ignore the interim fluctuations. I'm talking about 2, 3, 5 years. If you're positioning your portfolio today for the next 3 years, I think the most important question is whether it should be an aggressive portfolio or a defensive portfolio. And it's not stocks versus bonds, high quality versus low quality, growth stocks versus value stocks, US stocks versus foreign stocks, developed world stocks versus emerging stocks, large companies versus small. The most important question is offense or defense. If you have an aggressive portfolio in a period when defense was called for, you'll get chewed up. And it doesn't matter how you answered all those other questions. And if you have an aggressive portfolio at a time when it turns out that aggressiveness was propitious, it doesn't matter how you answer those questions either. You'll be successful. So I really believe that that's the key. Let me talk about it in another direction now. I believe that every investor, myself included, every day faces 2 risks. I call them the twin risks. What are they? The first one is obvious. It's the risk of losing money. The second one is a little more subtle. It's the risk of missing opportunities. And we have to confront these every day. Now, if you say to me, I want to be absolutely sure that I don't lose any money, then I'll say, okay, we'll put you all in T-bills. You can't lose